Hello everyone, welcome to the YouTube channel Time is Money. On this channel, we'll be discussing various topics related to money, such as trading, investing, money management, and much more. Since this channel is still new, it would be great if you could click the subscribe button to help it grow. In today's video, we'll be talking about something that's already quite familiar to us all, money. But where should we start? It's probably best to begin with its definition. How did money first appear? Is it only a tool for payment? And what role does money play in today's world? We'll go through each point, one by one. It's undeniable that money plays a very important role today. There's even a saying, money is everything. Most human activities today are connected to money. But what exactly is money? The simplest definition is that money is a tool used to make it easier to buy, sell, or trade goods of perceived equal value. Why is it considered convenient? Because money is recognized and accepted by everyone as a standard of value. Then, why is money recognized and accepted as valuable? Obviously, because money is guaranteed. Here, guaranteed means it's legally authorized. Some of you might wonder, why does it have to be money? Couldn't other objects be used as a medium of exchange? Why do we go to such lengths to create something that doesn't naturally exist in the world? To find the answer, perhaps we need to take a look back at history. In ancient times, during the era of hunting and farming, people met their needs through their own crops and hunting efforts. But eventually, there came a time when not all needs could be met individually. People then began to think of other ways to fulfill their needs. The easiest way was to exchange with one another. This exchange is what we now know as barter. Over time, however, the barter system faced issues, namely that exchanges were often unequal. People of that time then began to think of a new way to transact by using metals, limited to gold and silver. Since these two metals were rare and limited, they were considered valuable. And so, barter gradually declined, and transactions shifted to using metal currency. However, a new problem arose. Metal currency was heavy, and if one needed to travel or make large transactions, carrying so much metal currency was conspicuous and attracted criminals. From the era of metal currency, let's move forward a bit to the time when paper was invented in China. Paper soon became an alternative material for currency, though it wasn't used quite as it is today. During the Tang Dynasty, the Chinese government issued the first paper money. At that time, paper money didn't carry a face value. Instead, it served as a proof of ownership of gold. The system worked as follows. A person would deposit their metal currency or gold with a government-owned bank. The bank would then issue paper money that documented the gold ownership in the bank. The amount of paper money issued was limited, only matching the amount of gold the bank actually possessed. This early form of paper money was also known as an IOU or IOU, meaning the bank owed the paper holder the equivalent in gold. Thus, at that time, paper money could be considered just as valuable as gold. What I've shared here is a broad overview of the history of money. If you're curious about the history of money in America, I'll make a separate video on that. After understanding the definition and history of money, it's also important to know its characteristics, including its functions, value, and the conditions it must meet. In general, money serves as a medium of exchange and a unit of account. But beyond that, money also functions as a tool for transactions, a means for paying off debt, a store of wealth, a vehicle for transferring wealth, and, crucially, as a driver of economic activity. Next, let's discuss money in terms of its value. There's what's called intrinsic value, which is the inherent value of a currency. For example, in the case of metal coins, this value is based on the materials they are made from. The nominal value is the number printed on the currency. For example, paper money can have values of $1, $5, and $10, referring to the value of its material and its nominal value. There are also terms known as fiduciary money and full-bodied money. Fiduciary money means that the value of the materials used to make the money is less than the nominal value printed on the currency. For example, a $10 bill may only have a material value of $1 to $5. Meanwhile, full-bodied money is when the intrinsic value of the currency, or its materials, is equal to the nominal value printed on the currency. This usually occurs with metal coins. So, how do we assess the use of money itself? When you purchase an item using money, for instance, a portion of food priced at $5, this is referred to as the internal value of money, which is the ability of money to buy something. If there is an internal value, then there is also an external value, which is the ability of a currency compared to other countries' currencies. After understanding these various aspects, I believe there are at least two main conditions for the existence of money. The first is technical requirements, and the second is psychological requirements. The technical requirements for money include being easy to carry, durable, divisible into smaller units, having a stable value, being widely accepted, being available in sufficient quantities to meet the needs of society, and not being easily counterfeited. On the other hand, the psychological requirement for money is that it must satisfy the desires of the person who possesses it. As time changes, technology advances and money evolves with these developments. Money, which used to be in physical form, is gradually becoming non-physical. As we all know, there are things like e-money, tokens, coins, and so on. All of these are forms of modernization of money itself. So, why does this change happen? Because the world is changing. As the Greek philosopher Heraclitus stated, the only constant is change. In the past, nearly all transactions had to be done face-to-face or through direct communication. Now, transactions can be made from anywhere and at any time, without being limited by place or time. The money we use to carry in our wallets or put in envelopes can now be accessed through debit cards, credit cards, or even e-wallets on our smartphones. We no longer have to shop at markets or supermarkets. If we want something, we can simply search for it and order it from e-commerce platforms. With the digitalization of money, most commercial sectors have also adapted to this change. Interestingly, along with the digitalization of money and related fields, opportunities have emerged for us to earn income from the digital world itself. This includes online trading, participating in and providing online courses or training, becoming digital content creators, and even becoming traders, whether in stocks, cryptocurrencies, or Forex. Trading or becoming a trader has recently been seen as a promising profession for some because it is flexible and can provide additional income beyond their primary profession. That's all for this session. I hope it helps you understand what money is from its definition and history to its role in today's world. I hope what I've shared adds to your knowledge about money and inspires you to accumulate more dollars. Please leave a comment if you have any thoughts on what I've discussed. If you find this video helpful, please click like and share it with your friends. If you enjoy videos like this, don't forget to subscribe to this channel and turn on the notification bell. Remember, money can't buy happiness, but it can provide happiness. See you in the next video.